go from there, right? And I'm going to talk about today a couple of things: the ADX and reversion to the mean, trading versus trend trading, as well as using sectors, using sectors and the best performers in the sectors to help you decide what to invest in. All right, so let me open up SPY. And Henry, feel free to interject anytime as well. Okay, so let me just, okay, there we go. Okay. Come on. There we go. Okay. And let me also open up so the nice thing is most of the indicators here, right, are publicly available in either Yahoo Finance or TradingView. So you don't need to pay anything for a course or for indicators. There are many people who actually sell this, like Simpler Trading, in case you're interested in this. Just in here. Great, good. Set off. Okay, so starting with this, right now, couple of things, right? I'm looking at the daily chart for the most part because a lot of our trades are relatively short term. However, you also want to keep track of the monthly and the weekly and the monthly charts, because a lot of long-term trades will take place in those charts. So just as a quick thing, how to do that in Yahoo Finance, just click on the 1 month here, and you can actually see here that the ADX is above 20 on the monthly chart. So if we do pull back on the monthly chart, now that could look very bad on the daily and the weekly charts if things are dropping on the monthly chart, but you can kind of see it, what's happening, like right here, for instance. You see in 2022, we had a fairly big drop through most of the year before it started turning around in early 2023 and moving back up, right? And you can actually see the oscillators work really well on the monthly chart. So if you look at the RSI, you look at the MACD, you look at this Bollinger percent, right? And oops, yep. Oh, all right. And we, and things like that, right? Momentum indicators such as the MACD, and even the squeeze is kind of a momentum indicator. It's both a cyclical and a momentum indicator. So they work really great, right? Especially you can see the crossovers, right? If you're uncomfortable with buying at the low, or buying when the squeeze turns yellow, you could wait till the MACD crossover to confirm it. So that's that's there too, right? So I actually do like the monthly chart quite a bit. However, one important thing to note on the monthly chart is that opportunities, are provided kind of few and far between. I would say between every 3 to 7 years, you might get an opportunity on the monthly chart. And if you look at the weekly chart, you can actually see here, right, that we are starting to kind of go sideways here. You can see right there that the ADX is in fact lower than 20 there. So recent market.
I had a question, Anand. So if right now we have ADX is 12. I think
yeah,
hovered over that. So
that's on the daily, right?
So what does ADX 12 mean as far as
okay?
The speed or the
yes. Well, I was going to get to that next, right? I just want to show the sideways. So if you see like ADX being above 20, right? ADX being above 20 means there is a trend, right? So if you look at the ADX, let's just go over it quickly here, right? You have the green, you have the red here, and you have the black. So the black indicates the strength of the trend, while the green and the red tell you the direction. So if the green is above the red, it's in a positive direction. If the red is above the green, it's a negative direction, right? And this applies to any time frame and any chart, right? So the black, of course, tells you what the strength of the trend is. If it's above 20, there is a trend. If it's below 20, it's more of a sideways situation, right? It's trading in a range, right? So if you look at the situation in late 2024 to early 2025, before the tariff situation happened, right? You can also see that the weekly chart went below 20 there, right? In this region right here, right? Now, that does not mean that there is going to be a reversal, but when things do go sideways, it's much harder for people to make money than in a trending situation, right? Whether the trend is upward or downward. So, a lot of people.
Like, for example, for today, I see ADX is super low and we got the red and green pretty much touching each other.
Yes.
That kind of tells me that the market is slowing down.
Yes, that indicates that. Yes.
Yeah, it's exactly. Kind of like we're not going up too fast and we're not going down too fast either.
Right. So you could still do, reversion to the mean trading, and I will show you how that works on the daily chart, because that's really where we would be doing it, since, right, and this is a very important thing to establish here, most of the trades that we would be doing, using RTM trends are going to be short-term trades, right? Like maybe 2 weeks out to a month out mostly, right? So you can generally use the daily chart for that, right? Or hey, if you're comfortable doing, day trading, you can use, the hourly charts, the 5-minute, the half-hour charts, or even go as low as the 5-minute charts. I don't necessarily recommend lower time frame charts, because things change very quickly there, and you have to have your finger on the trigger ready to pull it before any in order to take profits, right? Because if you're not there, right, things change back so fast. So you have to be like, all right, if it hits this target, I'm out. Or you have to set some kind of a limit order, right? Saying, hey, I sell it at this price as soon as it reaches that, or something like that, right? Then that way you don't have to be at the trigger all the time.
Based on this, Anand, do you think this is a good time to go shopping for stocks or leads or options?
No, not
really for longs.
Not really for longs, right? However, if you do find good trending stocks, right, relative to the sector you're looking at, right, and this is something we'll try to do as much as we can every Sunday, right? Scan the various sectors, see which ones are trending upward, right? And then pick the top stocks in that sector, right? The top performing stocks that are trending in that sector, and try to buy those as close to support as possible, right? And again, in this situation, since they are short-term trades, you would be using the daily chart, right? I would not recommend long-term trades until there is an established direction. For the SPY and the QQQ. Now, here's the thing. Right now, I'm showing you the SPY, but the QQQ basically does the same thing that the SPY does. So, what you see here, you can basically overlay on a QQQ chart as well. Right. Now, let me quickly magnify this most recent situation here, right? So you can see kind of how reversion to the mean works. So you can kind of see around late October of 2025 to early November, we started having a reversion to the mean situation where the ADX went below 20. Now, here is the key to trading the situation once it starts to go below 20. When you see the RSI go above 65 and you see the Bollinger percent go above 90, right? That's when you buy puts down to the 21. And if you see it the other way around, where the RSI goes below 35 and the Bollinger percent goes below 10, right? You can start buying puts or calls up to the mean. And again, you're going to do it short term. You're going to set a stop below the candle that you bought it at, right? And be very strict about holding to that, right? But generally,
for Bollinger Zero, that means at the bottom of the bottom
yes.
lower
Yeah,
Bollinger Band.
if
100 is
it's
the
10
top.
or lower, right, you're close to the bottom Bollinger. If it's 90 or higher, you're close to the top Bollinger or above, right? So if you look at the situation as as shown here, right, you can see a lot of the times when we got close to or above that top Bollinger, we did revert to the mean, right? And when you got close to the bottom Bollinger, or you kind of did revert back to the mean again, right? Now, here's the best part as well.
This is powerful on indexes.
Yes, it's very powerful. Like most of these patterns, right, work better on the indexes than they do, and maybe the high performing stocks, right? But with individual stocks, since they are driven a lot by environment and news, right? Heck, if you knew the SPY or the QQQ alone, you could just trade that all the way, and you don't even need to think about any individual stocks. I mean, if you're not comfortable with such, right? So here's the other thing that you also can note, right? If you see the daily chart going down like this, right, you can also check the squeeze, and you can see right here at that same point that the squeeze turned from red to yellow. So you could actually buy when the thing turns to yellow and take it up to the mean or take it up to the top Bollinger too. And you can see here, right, we are in a situation where the ADX is less than 20. So if you see how this happened, right, we are hitting that top Bollinger, right? Right now, in these situations, I think the Bollinger percent wasn't above 90, so I did not enter. But when it came right there, boom, entered, got out here. And here's the other thing: how many contracts you buy is dependent on your personal risk, tolerance, right? So basically make it according to the size of your account. I tend to be comfortable with 1 to 2 contracts, for something like this, right? Like where it goes down to here. But maybe once we get to a point where we can afford 10 of these, this can actually be a very good addition to your account, right? Because something like this can be like 500 a contract, right? So if you buy 10 of those, there you go, 5,000 a contract. You get $5,000 in one hit. And as long as you're strict about exiting, you're out. And if it goes above, so the stop would be set at about that resistance there. So if it goes above that, you're out. You don't lose as much either, right? And again, you can see right here, it came to the top Bollinger, went back down, and then here again, it came to it actually broke the resistance here, came to the top Bollinger, but unfortunately, it broke the resistance without the ADX actually going above 20, right? So you can see right there, right? It went back down to the mean again, but then came back up. Now, in this situation again, it did not actually have the Bollinger percent above 90, right? But I still bought the puts only because of the whole Greenland situation, right? And so that following, day, it just, plummeted down, which is when I took my profits. And this time, look at this, right? It plummeted below the Bollingers there, right? And you can see this here as well, where it went below the Bollingers, and you can see the Bollinger percent was, slightly negative, as was the RSI. So that's when I got some calls and said, I'm going to take it just right up to the mean here, the 21 EMA, and get out from there.
Just a quick question. Do you mind going over the Bollinger numbers again? Did you say above 90 for puts and
above
10
90?
calls?
Yes.
Okay.
Above
Thank
90. You. So sometimes it can even go above 100, right? So you can see like right there where it went above the Bollinger, it's even above 100 in those situations. if you do get that, right, that's even better. If you can, um, if you can get that, right. But of course, make sure to set the stop above that particular spot there, so that you don't lose too much on that situation, right?
Okay. Thank
Because
you.
the problem, right, is sometimes what happens is you see how you can ride the Bollinger. So if the trend is above 20, right, if the ADX shows above 20, right, there's potential for it to keep riding. And if the news is very good, right, it could keep going like that. It could start turning and going above 20, which means all your long positions will be in good shape. So you don't need to really worry about it too much, right? But as long as this thing is below 20, yes, above 90 Bollinger is the buy point, and below 10 for the and you should be as strict as possible about the numbers, right? So that you don't buy too early and lose money.
Is there one that you recommend focusing on more than the other, or should we focus on them together, right? Because you mentioned the RSI and the Bollinger, so should we
Both,
look at both of
both,
those?
both should be. Yeah. So RSI.
Okay.
So if for the put, you have to have a RSI above 65. Now, let me mention one more thing. You can see right here, this says 9, right? So this is the 9-period RSI, and the top and the bottom. So what? Oh, yeah. So the top and the bottom, the overbought and oversold are 65 and 35. For the default, right? When you do the RSI default, it's 14 periods, right? And the tops and the bottoms will be like 30 and 70 or something like that, right? So this is a little more sensitive and a little more accurate from what I've done, from what I've seen, and what I've used it for. So 9-period RSI, ADX can be default at 14, right? Everything else can be default. Bollinger percent, this one is a 20-period, right? The MACD, of course, you got 12 and 26, right? These are all default settings on all of these particular indicators. However, the RSI I changed to 9 instead of 14, right? So again, RSI below 35, Bollinger percent below 10, right? By the call, right? Again, as long as this thing stays below 20, right? So you can actually do that. And of course, there's another way you can play it too, right? For those who are interested, you can draw support and resistance, right? Which I've done here, and do that too, right? So it's like, hey, you know what? It's below Bollinger and it's hitting a support, and the ADX is lower than 20, and maybe you get lucky and see the squeeze going from red to yellow. Hey, why not? Right? And for those of you guys who kind of arrived a little later, I was mentioning some of the news that you need to be on the lookout for. Wednesday is the Fed meeting, the FOMC interest rate decision, right? Now, I believe that the market is pricing in two interest rate cuts from now to June, right? So the expectation for this time period is that they are not going to do anything, right? Now, in my situation, right, whenever I'm looking to trade, and whatnot, I prefer if the Fed either does nothing or lowers the rate, right, for an up market. If they're going to increase the rate, then you have to make the decisions accordingly, because usually that will mean a drop in the market for a more extended period of time than, say, a couple of weeks or a month, right? So that's just a word of warning, right? Pay attention to the Fed news more than anything else, right? Because most of the time, any other news, right, might go for like a couple of months or something like that, right? If it's persistent enough, like if you look at COVID, right? COVID basically took down the market for like a month before it started to shoot up, right? And then the tariff news, I think, was a couple of months, before it started to shoot up. But in 2022, when the Fed decided to raise the interest rates, they said they were going to raise it up to 5%, which they ultimately did, right? That whole year, right, you saw kind of a downward situation in that, and that extended for like a few months. So, point being, Fed is the real driver here of all the markets, right? Whereas other news can affect it for a period of time, right? And the way you can also tell, if you look at the weekly chart or the monthly chart, if the downtrend in the market looks like a blip in those higher charts, then it's not really a big deal, right? But if you see that it's really, going down to, such that the squeeze goes red on the weekly or the monthly, then okay, this is more serious than we thought. So that's the thing, right? So, and the other thing I was going to tell you guys, there is also a threat of government shutdown that is looming right now as well, right? So this could be a more a little bit, if it does affect the market, right? It would be a little bit of a longer term situation in the markets. So again, right, make a mental note of it and decide after that, right? Keep an eye on the levels, right? And if you start to see it breaking and you start to see this thing turn red and you start to see the ADX going up and above 20 and the moving averages start to cross over to the downside, then okay, this is a more persistent problem than I thought, so I have to start keeping an eye on it. That's it. So that's the basic market, I guess, overview for now. So Henry, would you like to run anything, like talk about anything? Start maybe.
Can we go over maybe the first like 5 minutes of the call? I think some people joined late.
Oh yeah. That's what I just did now with the news, right? We spoke
Yeah,
about
so
the news,
yeah,
right?
just the news. It was the
Yes.
Fed. The Fed
So let's
events.
list it in order. Fed meeting Wednesday, right? Threat of government shutdown. Tariff. Trump threatening tariffs on Canada, right? 100% tariffs if they, because that actually is not just with Canada, but it also deals with the tensions between Canada, or the relationship between Canada and China, right? So that's why that particular thing it could be a big deal potentially, right? And did I miss anything else? I think those were the big ones.
Yeah, and then just how ADX we're running pretty low on.
And then
ADX.
and then for those of you who came in a little later, right? I was talking about ADX being above 20 or below 20, right? So above 20 means, and here's the other thing, right? The green and the red. So green above red means up, red above green means down, right? So if and this black chart is the actual strength of the trend. So if that black is below 20, right, then it's more of a sideways situation. If the if it's trending and the green is above the red, right, it's an upward trend. If it's trending and red is above green, it's a downward trend. That's the basics of it, right? And of course, we are recording the session too. So those of you guys who missed the initial part of the session can also look at the recordings once we post those, right? So yeah, that's the I think that's the big
BPSPX.
Oh yes, we can. Yeah, so that's the next thing, right, which Henry was talking about, BPSPX. So BPSPX is essentially the bullish percentage, right, of the SPX. So it tells you how many people are bullish versus how many people are bearish. So the higher the number, right, more people who are bullish. The lower the number, the less people are bullish, right? And
So,
generally,
what do you think of the BPS reading at 12,
oh
Anand?
yeah. If it goes below 30, right, you should start looking at the squeezes, right?
That one's
So
huge. That one's huge. That one you can pretty much bet the
yes,
farm on it, and then
yes, you
two
can,
or three farms out
right?
of
And
it.
this is from a lot of back testing. So let me actually show a comparison here, right? Let's go look at. There are a couple of things I like to do with the. Let's see here. Here we go. RSI, right? And I like to put the SPY as a comparison here, right? And let me update the chart. Now, here's the thing, right? You can see right here that
Would you go back
just
to the
add.
settings so I could take a screenshot, please?
Oh, sure. Let me go down. Yeah, that's the settings. So the only thing I changed here was RSI, okay? And I put SPY on the parameters there. Right?
Thank
That's
you.
the only changes I made. Everything else default. Right? And the reason I put the RSI here is also because that tells me, like, oh, if it's overbought here and it's overbought here, okay, there could be a potential issue, right? Now, it does not always reverse terribly, right? It could just see what happened here. It reversed, but it only reversed down like a little blip right there, right? So that's the only time I would say, hey, be careful about buying anything, right? So above 60 on the BPSPX and above 70 on the RSI. And for this, I'm content with keeping it at default 14, right? As I showed you guys before, the normal RSI that I like to use is a 9-period RSI. However, here I use the 14 RSI, right? So that's the other thing. But you can also see here, right, that if you look at the situation, this particular situation happened because of the tariffs, right?
It's a good time for some calls,
Hmm.
some long-term leaps on some indexes.
Exactly.
Keep a
Long-term leaps on indexes, long-term, leaps on anything you like that is, in high demand, right? So when I talk about high demand, right, I also like to look at institutional sponsorship, right? Now to do that, right, to find out about institutional sponsorship, you can go to Yahoo Finance and click on statistics, right, for any particular stock that you like. If the institutional sponsorship is like above 50%, you know that okay, these guys, enough people know about it that you can actually do a reasonably good job of predicting demand on it, right? When the institutional sponsorship is low, right, it's not, it could still go up, but it's less likely to do so. So yes, looking at this, right, so when you see this happening, right, okay, so in this situation, right, notice, right, that the ADX actually went down, right? So if we go back here, right, kind of to let me zoom out here a little bit, right? Now you can see right here, right? See here, the ADX was lower than 20, right? At about this point over here, right? So like late January, early February of 2025, you can see, right, that it went down, right? You could still have done reversion to the mean here, right? But then when it started to go down and the ADX starts to go up, okay, you know what? And that's why I say set very strict stops, because once that stop is gone, right, there is potential for a drop, right? Now, of course, it could just blip over there and come back up, and that's another thing that I want to discuss with you guys. That a lot of these stops, right, that people set on their particular, like with their broker, right? If they set a stop with their broker, right, the algorithms that are used by the hedge funds and Wall Street actually ensures that that the stops are actually hit, right? Which means you basically lose out if it does go down and bounce back up, you lose out on the situation, right? So that's the other thing, right? But yeah, if you set a stop, set it mentally and sell it off as soon as you start seeing it drop below that, right? And the stops could be based on the support and resistances. So you can see right here, right, that we broke down a support here, right? And if you look at the situation back here again, right? Let me just see when it started. So around March, it actually started to go above 20, right? Now you can see right here, right? March, it started to go above 20, and you can see that it's clearly negative now, right? So when you see that it's clearly negative, right, you can actually buy whenever it tries to retest any previous supports that became resistances, right? Or the averages themselves. So if it goes back maybe and hits the 21, you can buy puts again, right? And then set the stop above that resistance, right? In case it's just it actually turns around, right? Whereas, well, in this case, it just plummeted again before it started to go back up. And this actually is where you saw the situation with the BPSPX going way down here, right? Below 12.5, right? Now, again, below 30 is oversold, right? But in this situation, it just plummeted below 12.5 and started to go up. Now, in that situation, right, you would want to check, and in trading view, this is how you change the time frame, right? Let's go back over here, right? This was the spot where it started to drop right there, right? And it came back, retested that 21 daily and went back down, right? Now, when it went down, right, it started to come back up kind of the following week. And so when it turned to yellow, right, that's when you tend to want to buy,
Oh,
right?
Anand, we're getting questions about the squeeze, so I think this is a good time to talk about the squeeze.
Oh, yes, of course.
We can probably go back to the
അവനെ കുറച്ച് സ്നോ ഉണ്ടായിരുന്നു അതില്.
Mhm. Okay,
we can probably go back to the BPSPX after that about it being
sure.
on the
Okay. So
outside. Yeah.
a couple of things, right, about the squeeze. So this right here is the midline of the squeeze, right? So if we if we're going to quickly explain the squeeze, it basically, you can see here that we have the Bollingers and the Keltner channels, right? So see these red lines right here, orange/red lines. Those are called Keltner channels, right? They are basically represented. They basically represent the average true range of the stock, right? The
അവനെ വിളിക്കേണ്ടി
Bollinger
വരും.
the Bollinger bands, right, represent the standard deviation, right? And when the standard deviation goes within the average true range, right, that's when you get the squeeze. That's when you get the squeeze turning on, right? So this middle line right here, you can see where if it's green, right, it's the Bollinger bands are far apart. If it's orange or red, right? So I think orange is the weakest, red is stronger, and then I think black in this situation is the strongest, right? So if you start to get that orange and red, you know that, okay, the action is actually tightening up, right? And it can tighten to the upside or the downside, right? Now, what do the histograms mean? Okay, so the histograms are as follows, right? This light blue one, right? Light blue histograms means buying. The buying is accelerating. The dark blue histograms means it's either going sideways or it's kind of decelerating. Again, that doesn't mean reversal, right? Although sometimes it can, right? But That means kind of the decelerating buying or kind of profit taking situation. When you see the red, right, that means selling is accelerating, right? That means even the big guys are selling, right? And then when you see the yellow, you see this is accumulation again, right? People are starting to buy again, right? So again, it's kind of both a cyclical indicator as well as a momentum indicator, because as you can see, the stronger these histograms are, the more the momentum of buying too. So you can also confirm it with the size of the histograms on the squeeze. You can confirm it with the MACD. You can confirm it with the ADX, right? You can confirm it with the ATR, because when the ATR goes up, right, that means candles are getting bigger too, right? Now, the other thing to note, right, in many cases, the change from red to yellow usually is a good buy time. Now, there are times, yes, that you can be fooled, right? Like right here. This is the weekly chart, by the way, right? The higher the time frame on the chart, the better this actually works, right? I mean, doesn't mean you can't get fooled every once in a while, right? But you also have to remember the situation with the Fed, right? That's why I said the Fed news is the most important. So if they're raising interest rates, you're going to see a lot more zigzagging, right? Before anything starts to tighten up and go, right? So here's the thing. If you see zigzagging on the weekly chart, go to the monthly chart, right? And then you can see, oops, sorry, that was the daily chart. Sorry, monthly chart is what I meant to do, right? And you can see that for the most part, right, with the exception of the dot-com crash right here, for the most part, you can see that when the monthly chart turns from red to yellow, it's definitely buy time, right? And now, unfortunately, TradingView doesn't go back very far anymore, right? This one is kind of 30 years old, but I did this test when TradingView actually was able to go back. I went back as far as 100 years, and the red to yellow squeeze on the monthly always worked, right? The only trouble is, again, you don't get the opportunities very often. See, here is a small one around 2015 to 2016, right? So that's why I say every 3 to 7 years. But if you can catch this, there's nothing like it.
Full buying season.
Yes, if you can catch it, right? And I can say this with utmost confidence, having tracked this back 100 years, with the exception of very few, right? Probably about 95% of the time, when you see red to yellow, it's time to buy. And even in this situation, right? Okay, maybe you made a mistake here, right? But then you just wait for it, to do it again, right? So it doesn't take very long for it to start, going back up.
Oh, that's the dot-com.
Yes, this one was the dot-com crash, right? And subsequent 9/11 and wartime and so on and so forth, right? This right here was the 2008 2009 crash, right?
Okay.
So you can see right here, right around early 2009, it started to go from red to yellow, and then it just started a long bull run up till well, look at that, right? With the exception of a few here in 2018, 2019, of course, 2015, 2016, we had more of a sideways situation there. But you did, if you zoom in here, you can actually see you did go from red to yellow there too. So I hope that answers all the questions about the squeeze. I don't know. Henry, can you check if any more questions are coming in on the chat?
Can answer my questions. Thank you.
Sure. Okay, so
go back to BPS.
Yes, coming back to what we were discussing before, the BPSPX, right? So one thing I've observed about the BPSPX and anything that actually discusses, like I guess the attitude of the market or the participants towards the market, right? So we have a couple of measures that do this that we like to use, and one is the BPSPX and the other is the put call ratio or P call, right? So what I have observed about these metrics, these particular let's call them market internals, right? Is that an overbought situation can last a long time, especially if the Fed is either holding the interest rate steady or reducing the interest rates, right? People can, buy for a long time, but oversold situations where it dips below 30 don't last very long, right? I think maybe max we have seen is a month or something like that, where it drops and then it goes down and then immediately pops back up. You can almost get a V bounce from that. So I always love to see the below 30 situation. That's when, if you're buying puts at that time, right, I would say, okay, when it starts to go below that 30, start taking profits, however you choose to do so, right? You could do it, you could taper it off, or you could just sell all the puts at once, depending on how quickly everything drops, right? So, it doesn't spend a lot of time at oversold levels, but you can see it does spend quite a lot of time at overbought levels, maybe with some occasional drops below that, right? So I don't know how many of you guys know about credit spread trading, right? This is when you sell you sell one option and you buy an option of, if it's put options, right? You sell a put, at a certain strike price, and then a few strikes below you buy a put, right, to protect yourself from any loss, right? And you can also do it the other way with the calls, where you sell a call at a certain strike price, and then a few strikes above, again to protect yourself, you buy a call, right? And it's a credit because you're using the money that you're using the money that you got from selling one option to buy the other option. So that's why it's a credit, right? And the reason why put spreads actually end up working so well on the SPY or the SPX, right, depending on what you like to trade, is because of this situation where people tend to keep buying the market up and up and up, or make at least making it go sideways. So that's actually kind of a good way to take money out of the market periodically if you're so inclined to do so. The only thing I found out after 3 successful trades is that the round trip trading of the credit spreads actually made me run afoul of the day trading rules of the SEC. So after 3 trades, my account got locked out for 90 days for not, So if you're going to do credit spread trading, either make sure that it is a margin account or something like that, or have more than $25,000 in the account to be able to trade that. Because theoretically, you don't need a lot of money to do that, right? But again, the reason it works so well is because when the market goes overbought, the gamblers at some point expect a reversal, right? So you just sell the puts to them, right? Saying, hey, you think the market is going to go down now, right? I'm going to sell something far enough away, right? So but then it either expires worthless, or you can buy it back, right, at whatever profit you choose to buy the spread back at, right? So it actually tends to work like quite a lot of the time. The probability is about 85 to 90%. So yeah, that's the BPSPX, I guess, in a nutshell here, right? So Henry, anything you want to add to this?
Yeah, no, just basically the BPS is telling me that
Yep.
Shop lightly, because there's not a whole lot of room to run. So sometimes
Exactly.
you have for these cautionary periods.
That's right.
Look at seasonality.
Mhm.
So when I look at the 20-year seasonality, we don't really start picking up until March. So
Yes.
yeah, I think that's for me, that's a better time for me to look for some longs.
Yes, yes, exactly. Mhm.
Get some questions in the chat. If we can just
Oh.
do support resistance and Darvis boxes.
Oh, sure.
Do Boeing? I don't think you have any drawing on
Oh,
Boeing.
no. Yeah, sure. Boeing, right? Let's start with that. Yeah, I don't have. And look, actually, Boeing is trending pretty nicely here, right? And we can actually check it out here. So this is kind of what I mean. When I'm talking about relative high performers, right? So when we run the scans, right, one of the things we would want to run and see is that, hey, is Boeing, and I'm just giving Boeing as an example, not necessarily that you should or shouldn't invest in it, right? But if you're like, oh, look, it's starting to, you can see, oh, it's above 20 here, right? Okay, so what do I do now, right? Oh, it's like, okay, it's above 20. I can see the green is above the red. So anytime it goes back and hits either the 8 or the 21, I'm looking to buy, right? And we can kind of magnify it here a little bit too, right? So you can actually see what's going on. If the trend is really strong, right? And I define a really strong trend as being something above 30 or 35. Right, and I have that actually established in my particular program, right, where, oh, you know what, it's starting to, I see the green above the red, and I see this thing way above, uh starting to go like, oh, 27, 28, 30, 35, and actually right now it looks like it's at 55. That's that's kind of wild. I would say don't chase something like that maybe, but like once you start to see that, oh, look, I'm now at that particular average. And heck, you don't even need to draw the supports and resistances. The averages themselves can serve as a support and resistance, right? So if you're like, oh, it's hitting the 21, okay, I'm going to buy, right? And depending on how you like to take risks, right, you can buy, one contract, two contracts, three contracts, or whatever, right? Now, in a situation like this, if I was looking for this, right, I would say, okay, as soon as it comes down to the averages here, right, the 8 or the 21, right, I'm going to buy three, right? And, set a stop, like either here or maybe below the gap, right, to give it some room to work, right? Now, what I'll do is, okay, as soon as it goes and hits the top Keltner or the top Bollinger, right, I take off one contract, right? And by then it should give me at least a 25% to 50% profit, right? Then again, right, if it keeps going up, I start moving my stop further and further, right? And maybe at the next hit of the Keltner channel or whatever, or the Bollingers, I get out. Get rid of the second, and right, if it does a really big move like this, I just take out everything. Right. So yeah, the 8 and the 21, right? And depends on the strength of the trend too, right? But if the trend is really strong, the 8 itself can be the 8 EMA, right? Can be a very good bounce off point. And you can see it happen, a few times right here, right? Once here, once here, once here, right? So, something to think about at any rate, right? And of course, you're not trading RTM, so you don't really care about the RSI being overbought, right? Or the Bollinger percents really being overbought either, right? Just wait for it to go down to the 8. And again, right, one important thing to note: never trade against the trend, right? If it's a clear uptrend, wait for it to either go sideways or start to come down with the red and the green kind of intersecting again, and then see what happens after that. So yeah, so that again, that's something we're going to think about too, right? The Investors Business Daily has been recommending a lot of energy stocks as well as gold stocks. Those are sectors that we would like to at least run and build a watch list out of, right? Even if we don't necessarily buy. And that's another thing, we're going to do, check all the, sectors that are performing, relatively well, right? So let me just check one. second year, like XLE, which is the energy, right, sector has been recently, performing quite well. You can see the up move here, and you can see the bounce offs from you know, the 21 and the 8, right? Now, even if you missed this particular one, right, because it was below 20 or something like that, you can wait for the next situation where it comes either close or hits the 8 and buy that, right? But also what you can do is check out the holdings on the XLE. So if you're not in, if you want to trade the actual sector itself, that's also good, right? But if you wanted to check the holdings, you go to this website called Zacks.com. And then on the search bar here, you can type in the fund, right? The name of the fund. And then you go here to holdings, right? And then let's see, here we go, right? You can check the top 10 holdings and find out which ones are actually performing, relatively well, right? By looking at the ADX. And Henry and I will also be scanning these so we can go over it on the Sunday sessions, right? We look at the sectors that are performing well and the stocks that are performing well in that sector. And you can buy if you see that ADX higher than 20 and that upward motion with the moving averages, right? You can do a lot of good short-term trades with that too, right? Now, obviously, if you want to buy leaps, again, you want to look at the weekly charts and the monthly charts. But for some really good, quick short-term trades that go out to about a month, right, on the option expiry, right? You can. This is a good way to also do it. So something to to think about.
Yeah, lately
Mhm.
I've been seeing just gold and silver, all the mineral
Gold, silver, and energy.
mining companies have been,
Yes.
energy, semiconductors,
Right.
chips, AMD, Intel. They have a lot of chips to sell, and then also
Correct.
a lot of memory being for sale. That I heard that the data
Mhm.
centers are buying up all the memory,
That's
so
another thing. Yes.
they run AI on every device.
Correct. So, I mean, this is a reflection of the current environment, but again, that doesn't mean you shouldn't take advantage of it, right? Again, trade what you see, not what you think,
Yeah, I like to look
right?
for patterns. I like to look for breakouts.
Right.
I like to line them up with the MACD and the squeeze histogram.
Yes.
If I can get a couple of those in a row,
Yep.
then I can kind of place those trades carefully and I can monitor them. And
Yes.
usually only take maybe 5 minutes a day, and then I kind of just let them run, just let the account grow.
Speaking of breakouts, okay, when you know that the stock is in demand, right, you can wait for the trend, right? However, something. So this is the IBD 50, right, or Innovator IBD 50 fund, right, called FFTY, right? These are the top holdings on the FFTY, and you can see that a lot of these companies have gone up quite a bit in the last year, right? And a lot of that move has happened.
This is useful because if to see
Yes,
this list, you normally have to
right.
subscribe to Investors Business Daily. I forgot how much
Yes,
charge is 30 or 40 a month or
30
so.
bucks or 40 bucks a month. Yeah,
So,
I think so.
they update this list. They
Yes.
take off they keep the winners, they take off the non-performers, and then so if you're
Yes,
looking
but
at
even
stocks,
not really looking at this, right? If you were to invest in any of these individual stocks, right, you can't always tell that they're going to be great, right? And you can, I mean, let's take one example here. Sorry, oops, dang it. Hold on 1 second. Let me go back. Here we go. FFTY. So I guess let's look at Rocket Lab Corp. Core here. Go back here. And let's see how well it has done. Okay, so I want you to notice something about RKLB here, right? Uh, for quite a long time, right, it was actually kind of sideways, right? So the question then becomes, how would you know to buy, right? Like you buy here, you tie up your money for a long time, right? In this situation too, right? Look how long it was there, kind of just slowly going up and slowly going up and whatnot, right? So what you want to see is, does it go up like maybe 50% to 100% or something like that in like like a single bound, or almost like a quick run up, right? That means this is where you start to realize, okay, now the institutions are starting to look at it. This is where you would go to Yahoo Finance and see how the institutions are, what is the percentage of ownership that the institutions are putting into this, right? And then you say, okay, now I'm looking to, maybe buy here, right? Like it has to go up quite a bit, like over here too, right? Like, okay, now it kind of went sideways again, right, for a long time, right? Now, if you're patient enough, sure, right? Like go ahead, maybe it's money you don't need right now. You can just, throw it in there and tie it up. It's fine, right? But what you want to do is you want to see like tightening, rising and tightening price action, right? So once you see that, right, like you can see where the squeeze is showing, right? And if you're going to buy IBD stocks, right, you generally want to look at the weekly, right? So that this will actually tell you better how things kind of work, right?
Yeah.
So mhm,
Right.
right. So, you can see like, oh, it's been going sideways and then, oh, now it's gone up 100% or something like that. Okay. Now I'm going to go back maybe to the daily chart to see if it pulls back or whatnot, and then see if I want to buy it there. Right. Or you can also see right here, right, that it just blasted off past its previous resistance, right, which was over here. And now people may be starting to take profit, right? So then I might check the weekly squeeze, right, to see what happens there, and then either buy it past the previous resistance, right, which is a breakout trade, like Henry was saying, right? Or if you are feeling, brave, right, just buy it when the red turns to yellow and go with that, right? So these ones are harder, right? They don't follow the patterns that the indexes and the high performers in the indexes follow, right? These are relatively new stocks that institutions only find out about later, but you don't necessarily want to buy it before the institutions, because again, look at this. This is 2021, 2022, right? You have your money tied up for 3 years, if you're looking for that, 100% or 10 bagger or whatever. So, keep it in mind. Anything else, Henry?
We have a couple requests for charting Netflix and Nvidia.
Oh, Netflix, yes. Oh, actually, if you look at Netflix, right, one of the big problems with that right now is that there is a clear downtrend, right? Now, this is the weekly chart of Netflix, and you can see it is broken through a lot of supports. And if you actually look at it here, you can see that on the daily chart, right, the ADX is very high, and likely on the weekly chart as well. Let me check that as well, just to confirm. Right. So yeah, you can see it right here. It's actually a pretty strong downtrend. Now, of course, the reason for this is the acquisition, right? The Warner Brothers Discovery acquisition, right? And almost every time a company, makes an acquisition, they're usually taking on debt to buy, to make that acquisition actually happen, right? So just be, clear on that, right? That okay, we have a downtrending situation here, right? Yes, if the thing is above 20 and the red is above the green, you can actually buy puts on it, right? That's one way to trade this as well.
The pink line, Anand?
Huh?
The
Oh,
50
that's the 200.
or 200. We
That's
might
a
hit
200 period
might
moving
hit the
average.
200 weekly. That's huge.
Yeah. Oh, yeah. Oh, let me check that. Yeah. So if it's coming close to it, it's not hitting it yet,
Yeah.
right?
That looks like a potential bottom.
That does, it can be, yes, right? Because look, it's gone below the 50, right? Which is that, but remember, Henry, that's the weekly, right? When we look at golden crosses and death crosses, we are usually using the daily,
Yeah.
right? So number one, right? And again, short, whenever you're buying puts, it's a short-term trade, right? We're almost never buying put leaps, so to speak, right? We're just saying, okay, you know what? If the red is above the green, right, and it's hitting the 8 or the 21, right? You can see the trend, right? It's like, oh, boom, it goes down. Okay, as soon as it hits that bottom Keltner or bottom Bollinger, out, right? If it goes back up and hits the 8, all right, try it again, right? Fine, right? But what I'm saying is, again, you don't know when this thing will pull back up, right? But of course, this acquisition thing could cause problems for a while, right? At least 2 to 3 months worth of problems, right? But again, how would you know, right? The only time is if this weekly turns from red to yellow, right? And starts to really show improvement, right? That's when you really would want to buy this, right? Until then, I would say wait on it.
Yeah, maybe some yellow histograms, maybe some
Yes, maybe like a couple, 2 to 3 yellow histograms instead,
long-term support.
right? It doesn't always guarantee, right? Because you can see kind of what happened here, right? But of course, this was the 2022 interest rate reduction situation here, right? So Fed was taking everything down at that time. So, you know, make of that what you will. But this one, right, is because of the acquisition. So yeah, I would wait for at least some proof of accumulation on the weekly chart before I say, let's be confident about this one. Right? It appears to be reaching another support zone here, right? So, again, right, wait for it to actually bounce before buying it. Right?
Next you have is ONBS.
Oh, didn't someone ask about NVIDIA first?
Yes, we have NVIDIA, ONBS,
Yes.
NBIS.
Okay, let's do NVIDIA first quickly here, right? So looking at this, right? And again, I like the weekly chart, right? But if you're going to do short-term trades, we're looking at the daily chart. And we could probably draw another box here. And the way to draw boxes on TradingView, right, is like that, right? You can draw like that. Was that right there? Okay, so high to low, right? So the major swing was high to low. So I make it yellow colored. So when the major swing of the box is low to high, right, I make it purple. High to low, I make it yellow. So that's the number one, right? Now looking at NVIDIA, right? Let's check the daily chart on Yahoo Finance here. Right, and let's see where it is right now. And you can see actually it's trading in reversion to the mean mode, right? And so, yeah, in this situation, right? And again, right, these kind of patterns work better on indexes than they do on individual stocks, right? But that doesn't mean you can't use it on individual stocks, right? So you can see right here, as long as it's below 20, right, you can always trade it, and you can see right now it's just came off and come back to the mean, right? So again, you have to be very strict about it, right? But let's see what happens with this one too, right? We can see right now it's kind of in the red zone on the squeeze here, right? And checking the weekly here, right, really quickly. It is also red zoning on the weekly, right? So if I were to do a long-term trade in this, I would want to see a yellow on the weekly, maybe a couple of yellows before I am confident to actually buy this one too. Well, what else, Henry?
NBIS,
Oh, N.
B as in boy, Indigo.
Okay. This one, Nebius Group.
Yes.
Okay. All right. Let's see. Oh, this one looks good in terms of the weekly chart. You can see it just shot up and now it's come back to the averages, right? So in this situation, right, again, if you're doing a short-term trade, right, look at the daily chart and see, where it's kind of headed, right? And it kind of does look a little sideways here, but let's confirm that by looking at it, right? Right. Yeah. So see, it is below the uh, 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 reversion to the mean threshold, right? And you can see, yeah, it does revert to the mean every time it tries to go up, and it reverts to the mean, you know, um, every time here, right? When it's coming back up. So I would say either wait for it to get out of the reversion to the mean mode to the upside, right? Or take a look at the weekly chart here, right? And try to maybe see if there is a yellow, because if it's at the averages and moves to the yellow, right, it can be pretty decent, right? And this could almost be considered a cup and handle, sort of, right? So, usually the handle happens at a previous resistance, right? Because a lot of people who were chasing the move, maybe bought up here, right? And so what happens is they try to and some people try to buy the dip, right? You can see like there are some attempts at an up move here, so people might have thought, oh, the danger is over, but then they bought and then boom, right, lost the money. So when it came back up, it's like, oh, the people who bought here are like, oh, I've recovered my money, I'm getting out, right? And then you see the up move after that. So and then a lot of people will start to take profit, right? So if you see that things are kind of starting to move back up, okay, let's look for proof of accumulation on the weekly chart. And then, if you want to buy long term, that's the time to do so, right? All right. Anything else, Henry? I think before we head out.
I think two more ONBS and
Okay, let's look at ONBS. Oh, this one is, oh no, OMBS or
D as in dog.
oh yeah, I remember this one. Yeah, semiconductor, right? All right. Looks like almost a textbook cup and handle here, right? And you can actually see, okay, so right there, I think was the IPO situation, right? And then probably a lot of the insiders sold off, right? Either to other people or to institutions. And then you see the, kind of the base formation here, right? And then the up move.
Drones.
Huh? What's that?
One is a drone stock.
Oh, yeah, drones, right? Yeah.
Drones and Long
Yeah.
Beach.
That's right. So you can see, right, if you draw the lines, right, you can actually see that people who tried to buy, those previous up moves and were wrong about it.
The massive cup.
Right? Yeah, it's a massive cup, right? So now if that is going up, right, you could actually buy it on a pullback, right? Either on the weekly chart or on the daily chart, depending on how short or long you want to hold this. Right? So yeah, again, right, take a look at it on Yahoo Finance, right? Hold on, let me go, right? Taking a look at it now on the daily chart, right, for Yahoo Finance here. It's actually pretty decent on the uptrend. So it's kind of coming back and hitting the averages. So potentially a good buy, right? But as I said before, right, watch what's happening to the market, because, well, actually, interesting thing. The futures were pretty bad, kind of earlier today, right? The Nasdaq was down about 250 points, so was the Dow, right? And the SPY was down about, well, the SPX was down about 45 points. But now it looks like things are starting to steady out a little bit. So see what happens on Monday. I would urge people to be careful about buying until the Federal Reserve interest rate meeting has finished and see what the results are of that. Right? Only because, like I said, that's the only real news I care about. Anything else, whatever, look at the pattern and buy. But depending on what the Fed says or doesn't say or whatever, we might have a problem there, possibly. So if you're making any buys, be careful until then. Well, what else, Henry?
I think last one, Nokia.
Nokia. Oh yeah, of course.
I think Intel is final time.
Okay, all right. Let's look at this one first. It looks like it is kind of going below 20 right now, right? Going back and forth between, right? Let's check the weekly chart. And I do like the weekly chart, right? It has broken out of a previous resistance, right? And it's kind of selling off, right? Again, couple of buy points. Either you can buy it when it runs past this point, right? Or if you're feeling brave, you can buy it right now, right? And see if it goes past this point, right? Like either here or here, right? But it does look like a pretty decent, buy right now, to be honest, right? So yeah, like I said, right? Be careful though until Wednesday, right? And so let's see. Yep. So it's kind of hitting averages now, right? And let's see what happens here. Oh, sorry, wait. The Bollinger percent is above the situation here, right? The RSI is not quite there yet, but it's almost there. So if this thing remains below 20, right, you could either buy a put on it or wait and see what happens, because if it breaks out, right, it'll be a very good one, right? What else, Henry?
Cái
Intel?
bơ này không ăn.
Hold on.
Cái
Intel,
bơ
right?
chợ cũng bé nên muốn bón hay dục.
C. Right? Okay. So looking at
If you
Intel,
have
actually,
time, I don't want to take too much of your time, but if you could look at Microsoft.
Sure. Yeah. Microsoft is also, yeah, sure. We'll do that too. If you look at Intel, right, it has recently come out of the reversion to the mean. Now it's actually trending upward, but I think there's been some profit taking. It has come back down to the averages. So see what happens here, right? If it kind of steadies out here and doesn't, again, if you're feeling brave, you could buy it right on Monday, right? But I would say see what happens at the averages. If it kind of starts doing like what it's doing here, right? Sure, go right for it, right? And then let's look at Microsoft. Okay, so Microsoft, interesting. It has been a downtrending stock, for the moment, right? But it looks like it's going back up, right? And we can check the squeeze on it too, right? And for now, the squeeze is red. If I'm doing a long-term buy on it, I want to see a yellow, maybe a couple of yellows on it before I'm comfortable buying long-term, right? If I'm looking to buy short-term, let's go back to the daily, right? It is kind of starting to look good for a short up move, right? But again, right, here's the thing, right? Remember what I said, trade what you see, not what you think, right? And what I see right now is an ADX, a negative ADX higher than 20 right now, right? So in this situation, until that changes to to a positive ADX, I would not even bother with it, right? Unless you want to buy puts on it and see if that works out, right? So yeah, I don't recommend not even a short-term buy right now, right? I would say a couple of problems here, right? We are seeing a death cross happening, right? At the moment, which again, hopefully might change soon enough, right? So we have to see how that works out, right? So we're seeing potential death cross, potential death cross, EMA crossing over to the downside, ADX above 20 to the downside. Not yet happy with this one, unless you want to buy and hold really long, for a long time. So, right, be careful with this one, right, until you see this thing change. So, all right. If there is nothing else, I think we'll end the session for today. I have to go pick up my son from his class. We will.
Thank you so much.
Sure, of course. And we'll do the same time next week, 6:15. This time, at least, like I said, for a couple of months. And Henry, make sure to put that down on the event.
Yeah, no problem.
Right. Sure. No problem. All right.
Thanks
So
for joining. Have a good week.
yeah, have a good week, guys, and we'll meet up again next Sunday.
Tread lightly this week, guys. Tread lightly.
Yes, tread lightly. Yes, I agree. Especially with all the news out there. All right. Okay. So Henry, I'll send you the recording after in a little bit once this thing converts.
Sounds good.
All right. Okay. So let me just end the session. See you next week.